I would like to now invite our moderator for this session, and please help me in welcoming with a huge round of applause Ms. Sonali Shelke, Fintech Sector Head, JP Morgan Payments. Very, very warm welcome to you. I would now like to invite our elite set of speakers. Please help me in welcoming on stage Mr. Shekhar Bhandari, President and Business Head of SME Banking, Kotak Mahindra Bank. So very, very warm welcome to you. Please help me in welcoming Mr. Sanjay Tripathy, co-founder and CEO, BRISKPE. So very, very warm welcome. I would like to invite Mr. Sachit Sahni, Head of Cash Product and Head of Transaction Banking, India and South Asia, Standard Chartered Bank. So very warm welcome to you. And please help me in welcoming Mr. Shrawan Saraogi, APAC Head of Expansion, Vice. Very, very warm welcome, sir. Let's have a huge round of applause for a fantastic panel right here. Over to you, ma'am.
Thank you so much. Hi, I'm Sonali. I look at the India Fintech segment of the payment business of JP Morgan in India. Today, we are going to speak about B2B payments, which is an exciting opportunity driven by rapid digital transformation. And to discuss this topic, we have already done introductions of the panelists, but one interesting point, there were two criteria for anybody to be on this panel. One, you had to be an expert on B2B payments. The second one was your name had to start with an S, otherwise you weren't permitted. I won't spend time now, you already know who they are. So we are going to jump right in. We are going to warm them up a bit and start off with jargon busters in B2B payments, okay? So we'll start off with Shekhar. He gets an easy one. He reached here first. So Shekhar, what is APAR?
I think I like a state which is very, very good, which is going to grow very well. Fortunately, I think accounts payable in Andhra Pradesh, I think, are very similar. There's another place you like very well, which is very good city, which is Arunachal Pradesh. So, and when you have, I think, all those combinations in, you do, I think, account receivables, account payables, which constitute probably more than 25% of the total B2B space, $125 trillion opportunity in the world. I think easy one for me, but I'm happy that I qualified on the second part when you wanted to choose the bank.
Well, I didn't. The organizers didn't one. Okay, moving on. For Sanjay, another easy one actually, ERP.
Enterprise Resource Planning. So I think it has started where all departments started putting their requirement at one single platform so that you can actually do supply chain. So previously it was all IT doing individual, processes and the technology. Now that has gone accounts, supply chain, your sales, everything can come in one go. So at one go you can actually control the entire business planning into how the business is performing. You can see through that platform. I think it was very popular in 80s and 90s. I think most of the IT money used to go in ERP planning kind of thing. I don't hear that term anymore.
Thank you, Sanjay. The next one for Sachit. It's a short form, recon.
That was not part of the script. But yeah, I think that's really going back to basics. How you start your day and end your day, whether it's for an accountant or a CFO or any treasurer for that matter. I think it's where you start from, where you end, and you make sure that all the pennies tally. And finally, that's what reconciliation is all about.
Correct answer. And SK is popularly known as SK, Shrawan's Robbery. So SK gets the hardest one actually because he took a while to reach here. I think you reached quicker from Singapore, but yeah, reaching the venue was harder. And yeah, what you've got is the full form of SWIFT.
Get it wrong. The reason I'm going to get it wrong is because I think WISE, which I represent, is building an alternative to moving money through SWIFT. But I'll take a stab at it anyway. SWIFT is
He's pretending. They knew these. He knew what I was going to ask.
financial technology there's an international in the middle somewhere, or interbank.
There you go. You're almost there. Okay, I'll help you out. Society for Worldwide Interbank Financial Telecommunication. There you go.
I hope I made my points.
Yes.
Not the only way to move money, and hopefully we'll talk more about that in this session.
Thank you so much. Now we'll jump into some tougher questions. Globally, like already Shekhar called out, globally the B2B payments market is about $125 trillion, and 16% of it is the cardable business. So the bulk of it, 84%, is APAR, the first point that we had made. And this is a flow which is full of complexities. So that's our first question. What are these complexities, and what do client segments demand that drive these complexities? I'm going to start off with Shekhar on this one.
I think first important point is that the B2B segment, which is $125 odd trillion opportunity, is higher than what happens on the consumer side, where all the investments happen, all the experiences are there. We have a great product, everything happens instantly. And the one which is called as one which is higher revenue, higher volume, actually becomes is ignored. Many people say it is ignored. I said it's more complex. And I have defined being a mathematics student. I generally say you do it in numbers. I think B2B payments are 64 times more complex than what a B2C part are. And I'll explain why. I think you said APARs. When you want to make a payment from individual to individual, it is one payment of say $1,000, I think, which is being paid. There are 3 modes through which you can pay. I think the money is paid. I think it is over. When you're on the business side, I think you'll say payment to whom, for what purpose, branch 1, branch 2, branch 3, mode 1, mode 2, mode 3, today, tomorrow, day after, and reconciliation with which mode. We should account for, was it a consultant driven, was it a business driven, and then accounting for it. And when you have, I think, complexity with respect to first the mode, then the technology, which is with every business or every, I think, enterprise, I think, will be different. The codes they use, I think, again, will be very different. Makes it that 64 times, I think, more complex. We generally have a 4x4 matrix, which we like. Here, I think it actually becomes 16 by 16 in order to solve for it. And that is a single reason, I think, why the investment required is higher, and the time it will take to resolve, I think, becomes, I think, much longer. To make it 64 times, it is too high, too huge. I think we would have solved probably half of that till now in the entire ecosystem, but in a fragmented manner. Can you do it in one source, one solution, one partner? I guess that becomes, I think, another challenge that if you want to provide a solution to a B2B player, you need to have, I think, a few more players who need to come together, work together. It can be various departments within the institution, or it can be, I think, various fintechs, I think, which will have to work together to give a solution, along with many customers. It is not one customer. I think there will be 4 to 6 sets of customers, which will add the complexity.
Thank you, Shekhar. And I really like the way you explain the comparative magnitude of the complexity with numbers, with mathematical justification. SK, over to you, if you could give us some thoughts from international standpoint.
So, interestingly, I completely agree, by the way, with Shekhar in terms of the difference, right, in complexity. But what we find is that because of the progress in peer-to-peer payments, right, whether that's UPI in India, or whether that's moving money cross-border, or other similar instant payment schemes across the world, businesses now expect the same. That's been our experience, that the progress on the consumer side or the peer-to-peer side has led to businesses wanting the same. Why can't I move my money instantly? Why can't it be cheaper? Why can't it be transparent? And why can't it be convenient? Why do I have to do so many more things and steps? Or why is there offline processes or documentation and things when I don't need to do that on the consumer side? So, and that I feel is a good thing because it moves us, and that's all of our responsibility to make progress. It moves us away from the excuse of it's difficult, which it is, by the way. But it's got to a point, and I think it's a very simple reason why this is happening. It's because businesses are run by people, right? And these people are now the ones getting used to easier ways of moving money. So, and so we're finding that progress, and for us, we've set that same bar, that it should not look different. Yes, we've got to work harder to get there. So that's one part of it. I think the second thing that I see that has happened is, in the last few years, whether that's COVID or whether it's just generally evolution of technology, people were even, not just the youngest generation that are more comfortable with technology, but people from all generations have gotten comfortable using technology. For that matter, people from all strata of society or different education levels. And that's another thing that is helping them get comfortable with a little bit more niche solutions that exist out there. There are enough startups across the world and in India that are solving for this, similarly as was done on the consumer side. But I think now there's a little bit more openness to trying those because they've tried that, right? They've tried other consumer apps that they would have never done 5 years, 10 years back. So that's generally how I've seen it. So it's very simple. It's expecting the same as what they get in their personal life. They want that in their business life. But the good thing is, so now there's pressure for all of us to make that progress. But second, there's a little bit more openness to trying niche products that are being developed for that use case that may have seemed too foreign in the past, but feel a little bit more familiar now.
Thank you, SK. I agree with you and Shekhar. The complexities that you mentioned, one reason they come up is because, and I was reading this somewhere, there are about like 100 plus accounting systems that the buyers and sellers are using, and there are equal number or more kind of file formats that are getting generated, and there are even more payment methods when you look at domestic payments or cross-border payments, and this is going to add to all the complexities. It adds to the cost, it adds to the efficiency, and the big R of reconciliation that Sachit mentioned earlier. So that keeps making it harder. There is one more big R that we wanted to address, and that's of the regulatory landscape. And I'm looking at you, Sanjay, now to help us understand that, both from a domestic perspective as well as cross-border perspective. If you could throw some light on the
I think
landscape.
you should have called a regulator as a panel member for this. Like, as a fintech founder, I have to be very, very careful, work between the lines. But let me see, like, how we see it. If you look at what regulation is trying to do and want to say, that they want to have reduce the systemic risk from the process when there is a then the payment actually moving. Second thing, they are trying to make the system secure, fraud-proof, and at the end of the day, customer money should be protected. So if you look at regulator, always looks at two lenses, primary lenses. Is that something which will really affect my system? Whether how the customer interests are getting protected. But what it is doing to the ecosystem is like, if you tell about a compliance, like fintech founder is things like, cost of compliance is really, really high. I should not do it now. And also, I believe the system is also responsible because, the VC, the investor, or they said, okay, you'll do it later. Just move on. First, let's get business, and then we'll talk about compliance. I think that is the primary thing. And the biggest thing, I don't know whether you know it or not. How many compliance professionals are there in the room? Only few. The cost of hiring a compliance
Let's see
professional.
what you want.
Yeah, cost of hiring a compliance professional has gone through the roof. I think some of the founders were telling me that today hiring a compliance guy is higher than the CTO because he has got so many demands, so many offers at the hand, kind of thing. So I think what is happening. Why then, what RBI is trying to do, if you look at last year or this year, they have got at least 3 regulation in payment space. One is PSCB, payment aggregator cross-border, then another is for the offline merchants. Then I think GIFT City also came out with the payment service provider regulation. So if you look at all the regulations, they talk about basically three things. They look at KYC in a slightly more improved version. They look at security. All the, like for example, all players like us, they're in OPGSP platform. Why is there us work to deliver in India? Like they were in OPGSP platform. Now we have to apply for PSCB guidelines. What means is increased scrutiny. Now that 81 bank is not just only monitoring us, it's RBI is directly monitoring us. So again, your cost of ensuring that security of your ecosystem is actually increased. The third part is that when we look at the other side of it, RBI wants to understand what is the flow happening through you, whether the flow has the right compliance measure at all stages, whether it's the AML, like CFT, and all those things have been really properly taken care of or not. But why the fintech founders are not liking it? As I said, it's the cost of compliance. Second thing is that when you have to put that kind of mechanism in the first place itself, you don't have that kind of money or that kind of resources or that kind of system to really make that happen from a day one perspective. But see, RBI is right on their way. But what we need actually over the if you think through we need something like a very stronger CKYC kind of system. If you look at today's CKYC data, probably 25% records are usable and 75% is not really so much usable. And how can we make it improved in the sense adding liveliness, adding selfie, and all those things, so that now that Ministry of Finance is telling CKYC you should compulsorily use. If that is available, then it will reduce the cost of compliance of all the fintechs kind of thing. That is one part of it. Second part I want to touch upon is licensing. RBI made compulsory that all the PAs, PSCBs, even that offline thing, everybody they have to take license, and the cost of license almost is 15 crore net worth you should have at all point of time. If I tell you it is like 3 to 4 times higher than any other country in the world. Nowhere in the world, if you have to take a payment aggregator equivalent license, which is, they call it MSB and PSB kind of thing, you have to pay more than $500,000 or 500,000 euro or 500,000 pound, including UK. And they've got 2 layered kind of licenses. What they do, and if I have to take a UK license, they said, start as a small PSB, then move to the large PSB. So that kind of licensing regime will really help fintech kind of thing. When you start up the business, if I have to park 15 crore money, let's say I started my company last year, I have to create a net worth of that much. This thing, to someone will give me 15 crore to park. It is almost saying that मुझे पैसा दे दो, मैं पहले घर खरीदता हूँ, उसके बाद business start करूँगा. So this is not really possible to look at that point of time. But why fintechs are required in the ecosystem? Because we want to also become like Wise one day, right? We want to also create innovation. We have to bring newness to the ecosystem. We want to give the best kind of product. Today probably my cost is probably cheapest in India, and compared to Wise, whatever they are offering, we are offering the similar kind of product and services at that kind of cost. But how can I do that when I have to park 15 crore rupees on the side for all point of time? It is a daily basis required. It's not even a quarterly based requirement. The third part is customer protection. I think that way, I think RBI is right. We have to protect customer. The kind of frauds, if you look at all the calls we get, cross-border is like manifold, because there are ransomware, there is invoice fraud. There are multiple ways people are trying to really attack the AML system. I think what as a BRISKPE we are doing, we are trying to work with the global players to create our own compliance ecosystem like Refinitiv, Kotak, and all those players to build something so that we can catch, they call it compliance as a 3-layer defense. So how can we make that defense stronger so that it will not go through? And we as a player from the day one, we are doing that FIU reporting. I think before we got even PSCB circular came in, we started reporting in FIU. Because that is much more essential to remove the fraud from the ecosystem. If all players agree that whenever they see a fraud, they'll report in the FIU, and at a systemic level we can really control that. That will really solve RBI purpose. And I think we'll obviously probably talk in some point of time. Banks also can play a major role as a fintech partners to help in the areas where fintech are not so stronger. So if you ask me, I don't see regulation is really a bottleneck for a fintech to grow. Their compliance is a bottleneck. But we need to address it smartly. If you can work with bank and regulators slightly more smarter in addressing more like an accelerated compliance rather than having compliance, all the significant compliance from day one. Because for example, if someone is moving $50, his compliance requirement vis-a-vis someone is moving $5,000 probably should be different. That's the kind of thing which you can look at to control it. Just to end it, like, more on a lighter note, when we are raising fund, one of the top tier VCs just listened to our compliance plans. He said, Sanjay, you are talking like a bank. I don't think you will operate like a fintech. So then, RBI circulars came, PSCB circulars came. So he came to me and he met another conference like me. He said, Sanjay, you can see ahead, like. See, this is how the problem starts, like the people who are pushing us, the money is coming us, they are not really so serious about compliance. So that is what is another problem in the ecosystem. Why the compliance is not taken from the, when the time is there. And we always feel away, circular came, oh, we have to do so much, the business industry has been collapsed because now the new norms are coming. I think we need to work with the regulator and 81 banks to make it happen.
Thank you so much, Sanjay. You probably can attend the 5 p.m. session with the governor and maybe make your ask heard. I'll move on to Sachit if he could give us some global flavor of the regulatory landscape as well.
Yeah, so I think, he just mentioned, the regulators and the fintechs and the banks, the entire banking system, they're coming together. The rails are there. I think everybody realizes the friction in B2B payments. To Shekhar's point, 64x complexity. Forget that. Look at the sheer volumes of money and currency that we move. They probably could have a systemic risk to small economies. If something goes wrong, we saw what happened a few years back when there was a fraud that happened in Bangladesh. So I think overall, I think the ecosystem is coming together. The rails are there. From a regulatory perspective, closer home, I think there has been some discussions around opening up the B2B payments on the BBPS platform. I think that's phenomenal because what we're probably trying to create is an exchange, a payment exchange. It exists for consumer payments, repetitive payments, but I think it's going to be transformative when it moves to business payments. And and I again go back to my point, what is the treasurer looking for, what is the CFO looking for? You're moving payments, you're moving information. That is so crucial for them to make sure that they know where the money is landed, right? And of course then if you cross border, there's FX, there's screening, there's sanctions and everything. So I think information is a key aspect. With a platform like BBPS, I think it could be a game changer. And the way I see it in the Indian landscape, you have BBPS on one end, you have TREDS on the other, which is a supply chain financing system. So I think between these two exchanges, you can solve a lot in the B2B payment space as far as India is concerned. And with fintechs, both my sides, the opportunity is immense. And with the regulatory oversight and with the regulatory nudge, I think that is bound to change. From a global perspective, I think, again, very, very positive moves that we are seeing everywhere. As a bank, Standard Chartered has tied up with Visa on the B2B Connect front so that we are helping our clients move money faster with predictability, with assurance in terms of when the money will be reaching the counterparty. So I think all of that is, again, something very, very welcome. Going forward, and probably, that's for another session, but I think the technologies, the DLTs, these are again going to transform, how B2B payments have moved. I think we've not even discussed what trade is all about. Trade is so documentation intensive. How do you make that more convenient and frictionless? I think that's ripe for disruption in my view, and fintechs are right there. I think solutions are there. Fintechs, banks, regulators, and when you're talking about trade, there are so many other counterparties. Insurance companies come into play, and shippers come into play, logistics players come into play. But that's where platforms like DLT are really, can transform the whole payments landscape as far as B2B is concerned.
Thank you so much, Sachit. Yeah, I mean, the more players you have got in, the more technologies that come in, and these business models, when they evolve, the regulators are also playing catch up, right? They are trying to protect the system, they are trying to protect the users. And globally, one example comes to mind is how open banking has evolved and how PSD2 regulations in Europe have evolved after this model came into picture. So I think it's an eventuality in terms of how regulators are going to keep adding on as there are fintechs and banks who are coming up with new ways of managing the same set of payments. I'm going to switch gears now to another topic, and that's back to APAR flows, which are getting digitally transformed. Businesses in India are replacing checks, they are making payments via RTGS, NEFT, maybe UPI to some extent for small value payments as well. So what are traditional players like banks up to? How are they helping digitize these B2B payments? We look at the bank panelists, and let's start with you, Shekhar, first.
I think the entire customer segment has evolved significantly in last 5 years. I generally call the world as pre-COVID and post-COVID, and we were behind customers to digitize themselves in terms of trade, in terms of payments, in terms of collections, even reconciliations. You realize, at least we measure as a digital index in our segment. If you were to look at SMEs, I think 83% of our SMEs are classified as digitized, where they do transact digitally, collect digitally, pay digitally. You'll find, I think, similarly in the large corporates and the conglomerates, I think on an average 71% of them actually, I think, being digitized. If you were to look at the India number, I think you will find the steady being contrast. I think SME number will be somewhere around 42% in terms of where I think the digitization level would be at different levels what it is measured, and on the corporate side I think also similar levels around 43, 44. But what has helped and what has I think gone, why did it get changed? I think what a customer wants is, I think, a simple convenience. I think what a customer wants is to transact. If during transaction or during this thing you make their life difficult, they switch to the physical mode, the branch mode, the RM mode, and if you are able to facilitate it, I think they actually become significantly, digitized. I think one of the questions which was asked yesterday to me at one of the diplomats' dinner was that, Shekhar, I think, is it possible for a 60-year-old gentleman who is an SME to move to digitization, and is it easy or difficult? And I said, I think in a 60-year-old gentleman's life, there are two things which are happening. Part one, that I think he has built his business well to move from probably a 3 million to a 25 million. But the bigger thing is, I think, the second generation has come in the business. And the second generation which comes in is so much so much focus toward digitization, efficiency, making the businesses work. And the combination of these two, I think, makes businesses tick. So if one were to see, I think products from institutions, whether it is fintechs or banks, ensure that the customer journeys are very, very simple and sweet. And then I think able to ensure that the adaptability is there for the customers, I think happen. We have a system called FIN, we call it FIN, for your needs, and that becomes, I think, the tool to go to a customer. I think they will think to reach to FIN first and then the RM the next. I think that is the right way in which I think the banks have to, or the fintechs have to focus on being there.
Thank you, Shekhar. Sachit, over to you if you could share your thoughts.
Yeah, I think very, very similar to what Shekhar is saying. I think it's all about convenience. It's all about making sure that the relevant information is there, data is there in time and in the right place. We've heard about ERPs, payment file formats. I think there's a lot of standardization opportunity that's available. And, to whatever SK mentioned, I think the standardization is a key piece, right, in this space. And that's where people like Swift, people like fintechs bring that into play and make the whole thing more convenient. So just take a small example, right? An ATM card across the world is the same size, right? That's standardization. That's the power of standardization. That's how it kind of makes it simple for everyone. I think that is one piece, and a huge burden upon banks also to kind of try and make sure that these kind of things are delivered to our corporations as far as B2B payments are concerned. Then, of course, I think the whole concept of technology and how tokenization is going to take this forward. I think that's a huge opportunity, probably a decade in making, but I think that can really transform how B2B payments are done. The whole instant gratification, making kind of currencies tokenized, assets are going to be tokenized, they're all going to be on the same platform, clearing systems are going to move it instantly. We've started seeing that, we've seen it in Australia happen on in the stock exchanges, we are seeing it on guarantees. So I think there is again a lot that banks need to do, but the banks cannot do it on their own. They need partners, and it's whether fintechs, whether it tech fins. I think that's where the whole concept of collaboration will take this forward. And of course, because the complexity and the sheer size and scale of the problem, if you will, yeah, it's so huge that the regulatory oversight is necessary, I think.
Thank you so much, Sachin. Overall, I feel globally treasurers are also looking at how do they optimize these B2B payments. And one of the solutions that comes to my mind from our side of the world, from JP Morgan's side of the world, is JPM Coin Systems, which is nothing but dollar on blockchain. And that helps build in efficiencies if you're looking at your business across countries. This particular product actually sits in our blockchain business called Onyx, which functions more like fintechs, less like a bank. And then coming to fintechs who are like developing solutions quite aggressively to solve key issues on accepting payment methods, on overall working capital optimization, like we have seen with Coin. We have global examples like Avid Exchange in US. They have created value-added platforms. What is happening in India? What is that the Indian fintechs are doing that is new, that helps digitize the B2B payment space? Sanjay, let's start with you.
Okay, so if you look at fintechs, what they bring to the table is like user interface and user experience, agility, speed, and quick turnaround on products and technology. So I worked in a big financial company for 15 years. Anytime you go to the tech team to ask for some development, he'll say, please get the prioritization metrics approved, then I'll work on this. So it takes 2-3 weeks to have a prioritization meeting, then discussion, then nothing happens for 6 months. So, this is the kind of areas where fintech can really work with banks to make this happen. So why you think Onyx works as a fintech? Because that's the only way a bank can move faster. So fintech definitely brings something to the table, which is currently the banks will not be able to do it. Because if you look at, I always look at a bank website and if you look at every single line what bank is mentioning, there is a fintech. There is a series of fintech working on that line only. Forget about the entire piece. So it is like, thinking like, multiple people are working on one single piece. Basically, they are trying to make one problem, working on one problem, making it better, faster, quicker, and cheaper for the consumers. So bank cannot work on so many things. So I think ideal case is what banks bring to the table is like trust. They have a lot of customers, and at the end of the day, they have got a core banking platform. So with the open banking coming in, when you are opening your APIs to the world, and find out the right use cases and tie up with a fintech has really built business for both the sides. I see cross-border payments is a very good use case for that. If you look at companies like BRISKPE and all, which when we are working with 81 banks, we are using 81 bank infrastructure. For us, 81 bank is Yes Bank, but also we are using a lot of other payment infra player in between, like a currency cloud and all, to bring the money through virtual account, creating virtual accounts, so that we are making the payment like exactly what other international players are doing. We are giving a local account to the customer, so customer can collect the money locally, and we can bring the money, and within 24 hours at a much lesser cost, we can give it to them. So it's a win-win for the both for the bank and the fintech. I think the way forward is understanding each other's requirement and understanding each other's advantages and working together in a ecosystem so that it's win-win for all. I think as you mentioned, whether it's a blockchain, CBDC and all, I think there's a huge potential for fintech and banks to work together and bring a lot more newer product. As you've given an international example, there are a lot of examples available. If you look at even the UPI payments, whether it's a Google Pay, Phone Pay, they're all working on a bank infrastructure, right? And the underlying infrastructure is bank. Similarly, take out even anything, today before that panel was talking about cards are nothing but they're all working on a bank infrastructure. So I think bank has a very good ecosystem, understanding that consumer piece, if the fintechs work on the consumer piece, make it better, faster, I think that will be a win-win solution for both. And we have got a lot more use cases now. It is not that we have to look at international use cases.
Thank you so much, Sanjay. SK, over to you. Views from fintech side, from maybe a global flavor.
So I'll give a slightly different version, because I think I completely agree in terms of the innovation that's coming, whereby fintechs focus on specific use cases and needs, and then really tackle that. So I agree, that's been. But just to add to that from something that Wise has done, and I think that a lot more successful fintechs are doing or should consider, is that, as Sanjay said, you take a specific problem, go deep, and there's a possibility that you could do that a lot better than even really large organizations with a lot of capital and investment and size, right? And once you're able to do that, so this happened with Wise. So this is about 4 odd years back, where we've already pretty popular as a cross-border payments company with a lot of users directly coming to our app or website and transferring money. And suddenly we realized that we were getting a lot of customers from this particular European country, and it's like, hey, what is happening? How are we suddenly getting that? And when we went to dig in, we realized actually there was a particular bank that was not really good at cross-border, and they were getting a lot of complaints from their customers. And so a lot of their RM or brand staff suddenly started saying, hey, actually for that, you should go use Wise. This is not a marketing pitch that we did. There was no partnership or anything like that. And so we just figured that out because some product manager was trying to look, hey, why do I have this spike of this particular customer profile? And so that gave us a really big insight that has been really instrumental in the direction of the company, where we don't just want to create this product that we want to directly serve customers with. Where now we set up a business line for us called Wise Platform that essentially takes the infrastructure that we've built to do cross-border money movement and provides that to banks, fintechs, and even other online platforms that have a need like that, but that's not their specialization, or they don't have the ability or willingness or the investments to spend many years to build that infrastructure. And so today we're partnering with banks across the world, with a lot of fintechs, but so to bring it back to what you said, so we today partner with so many B2B fintechs, but also banks, who have very niche products, who are serving use cases. It could be industry specific, or it could be somebody like, we work with Aspire in Singapore, they're very startup focused. We work with Brex in the US, we work with Monzo. So there's all sorts of B2B platforms. And what we say is, let us solve the cross-border part of it for you, while you continue to solve that. It could be the reconciliation, it could be the AR/AP, it could be financing. And so that's the way I foresee how evolution in this industry will happen and how we will collaborate, which is, let's find our niche. And for banks, by the way, I don't think that there's going to be need for them, and the specialization there is, one is the existing huge customer bases they have, but two is the trust that they have, right, with customers. And that is where fintechs need to leverage. So rather than always just trying to compete, find the people that might have a gap in what you're really good at and partner up and serve customers through that, achieving like a win-win-win.
Thank you so much. We are out of time, but I just still want to spend a minute on talking on technology. And we are changing the format a bit. Why don't we just go around 10 seconds each. Top technology for B2B payments. Shekhar, will start with you.
I think for me, I think CBDC will become the most important part, combined with blockchain, which will change and transform the future.
Thank you so much. Sanjay.
I think I agree, CBDC will definitely transform cross-border payments. And just to add one more word is I think we need a CBDC with a foolproof cybersecurity platform, because that is what will derail CBDC. If I'm worried about CBDC, only one part is because it is completely blockchain based for second transfer. So why the current system is taking time? Because it's getting checked at all points. So we need a very strong AML, KYC compliant cyber security platform which can take CBDC along.
Sachit.
I think DLT definitely, I've been talking about it, but I think on top of that there's going to be a huge amount of AI, ML, analytics, predictive frauds, all of that, which will really drive it. But somewhere I think we forget, and just getting the basic information across is so crucial. We're talking about these fancy technologies, but just getting the information across, I think that is the low-hanging fruit. And that's, again, like I said, it's in our remit to solve for it. So for that, you really don't need fancy technologies. But yeah, one thing I definitely like to say, in a decade, I really wish that trade will be paperless.
Sachit is focused on trade. SK.
So I'm not going to tell you a technology, but I'm going to tell you an innovation. And that is for a business to be global from day one. I think that's become more and more common, whereby people want to be able to serve customers across the world. And so one of the innovation that's coming to solve that is how can you have accounts, whether that's local account details, so ways for customers to pay you globally, ways for you to pay your suppliers globally, and function as a global business. So the innovation really is how do you solve for the regulatory challenges that come in helping someone with financial products cross jurisdiction, but doing that at one place, all of that. So that's something that we're really hard at solving, and I feel really excited about. It will use and leverage a lot of different kinds of technology, but it's really just what we're solving for.
Thank you so much. Thank you so much for your time on this panel and sharing your valuable insights on the overall landscape of B2B payments. I just wanted to summarize our discussion on which highlighted the power of digital payments in streamlining business transactions, in reducing costs, in enhancing security, in looking at flows like trade. We also managed to broadly cover the importance of leveraging technology for efficiency, for transparency. And the final point which kept coming up in this discussion is the collaboration between fintechs and banks. Banks who have robust infrastructure and fintechs who are nimble on their feet and can develop solutions quickly. How do we work together to build solutions which are robust, scalable, and they help with the demands that the dynamic Indian businesses have. So glad we could cover as much as we could with this time, and thank you so much. Thank you to the audience for being patient with us and taking out time and coming for this panel. Thank you. Do we have time for questions? Okay, you have to catch us at the back and ask questions if you have any.